What's going on? In this video, I am going to break down my current investment portfolio and then walk through some of the changes I plan on making over the next few weeks. So definitely stay tuned. Hopefully there's some things in this video that you could take and apply to your own personal finances. You just got to get started. Welcome to my channel. I'm Harlan D. White, and on my channel, I'm currently documenting my journey of eliminating almost $50,000 in debt. And so each week, I'm putting out content like this, sharing lessons learned along the way. So definitely, if you want to support the cause, hit that like button. And if you're interested in content like this, make sure you subscribe and hit that notification bell to be notified of future videos. And if you're interested in my debt-free journey update, I'll have that at the end of this video. However, as a bit of a spoiler alert, come this upcoming Tuesday, I will have less than $20,000 left to pay off all of my debt. So when it comes to my investments, I currently have about $45,000 invested across 5 different accounts. Over the last week, I've been thinking about making some changes on how I have my money allocated in those accounts. So I'll walk through each one of those accounts, show you what I currently have and my thoughts about moving forward into the future. All right, so the first investment account that I want to talk about is my Merrill Lynch 401k account. As you can see, this makes up the bulk of my investments with nearly $39,000 within this particular account. Now, the investments that I do have in this account are company stock, a Vanguard index that tracks the S&P 500, a Vanguard index that tracks the small and medium-sized businesses, a loan fund, as well as a target date fund of 2045. The most glaring thing to me is that my company stock represents 43% of my portfolio, which I personally think is too high. And the primary reason why it represents so much of my portfolio is because my company has had very good growth as well as pays dividends. As many of you know, the way that the 401k works is that you have a certain amount of money that comes out of each paycheck and then it's allocated towards wherever you direct it. So currently, I only have 5% going into my company stock. I have 65% going into the Vanguard S&P 500 index, and then I have the other 30% that goes into the Vanguard small and medium-sized company index. So to fix this moving forward, what I look to do is rebalance the portfolio. However, I'm still researching how I want to rebalance it. The other area that I did want to point out is the loan fund. And what that basically is that I have 2 outstanding 401k loans that I am repaying myself back for. And so what that represents is the amount that I am going to repay myself back, and it includes a percentage interest. One of the loans has a percent interest of 5%, and the other one is 5.25%. So the good thing is with a 401k loan is that you're paying interest back to yourself instead of if you were to get a loan from a bank, you'd be paying that interest back to a bank. However, the bad thing is that all that money is no longer being invested into the market. And so if I would have had that money invested into the market, I would have made a higher percentage increase than the 5% that I'm paying myself back. So that is definitely a downside to taking out 401k loans. And I would recommend no one do it unless you absolutely had to. All right, so the next investment account that I want to talk about is my HSA bank account. Now, this is my health savings account, and as you can see over here, I have roughly about $4,500 within this account. Now, the thing that I'm sure sticks out to many of you out there is that I currently have all of my money within my HSA in cash. And so having it in cash, I do get a very small percentage return each month on that money. However, what you can also do within an HSA account is open up a brokerage account and invest a portion of that money. And so what I did yesterday was I opened up the brokerage portion of my HSA. And so what I'm currently doing, just like with my 401k, is I'm evaluating how much I do want to invest within that brokerage account and in what types of investments I'm going to put that money in. All right, so the next investment account that I want to talk about is my E-Trade brokerage account. And as you can see over here, it has roughly about $1,200 that is currently sitting in that account. I opened the account quite a while ago. However, in the May 2020 timeframe, I ended up putting over for about $1,000 to dollar cost average into the S&P 500. So since that time frame, it has gotten some pretty decent growth, about $200, way better than sitting that money into a savings account. And so what I'm looking to do is to actually sell out of that position and put that money towards paying off debt. However, when I attempted to make the sell yesterday, I was notified that if I sold it, then I would be hit with a $49.99 fee because I hadn't held all the shares for longer than 90 days. So one of the other things that I'll be doing this week is to go back and see which and how many shares that I've owned for longer than 90 days so I can sell out of those positions. And what I'm going to do is I'm going to put that money towards paying down my debt. So the next investment account that I want to talk about is my TD Ameritrade Roth IRA account. And as you can see, it's only about $140 in this account. Now, I ended up opening this account many years ago, and I had more money in there that I eventually ended up taking out to spend on who knows what. However, today I only have an American Express stock and a ZAG stock. Now, the primary growth is in the American Express stock because it also pays dividends. So I believe I bought that stock at about $47. And as you can see, it's roughly $130 for that one stock today. Plus the dividends you see there, that's all from the American Express stock. And so I'm not really sure what I'm going to do with this account moving forward. I'm not really too worried about it. The only thing that I can think about that I may do is if I pay off my debt early this year, I might put some additional money into this Roth IRA for my retirement, but we'll see how that goes. And the last investment account that I want to talk about is my Robinhood account. As you can see over here, there's roughly $400 in that account. Now, my Robinhood account could basically be called my cryptocurrency account because all $400 is invested into Dogecoin. Over the last couple of weeks, I've put out videos talking about my investments in Dogecoin, which originally started with $25 because of FOMO. However, since that point in time, I actually looked into Dogecoin a little bit closer and I've invested some additional money. And as I mentioned on my last video, I am looking at Dogecoin as a long-term investment and don't intend on checking the prices day to day or week to week. And, over the long run, we'll see what happens. And so when it comes to my Robinhood account, I don't intend on making any changes. However, I don't intend to buy any more cryptocurrency on the Robinhood platform because I guess it's not one of the best platforms to buy crypto because they don't give you access to the private key. Now, I wish I can break that down in detail, but I'm still learning. And so if I do intend to buy any cryptocurrency in the future, most likely I will have to open up an account with a different company to be able to do so, so that I can have access to that key. Now, one day, maybe I can explain to you what that means. Today, I'm just going to leave it there. Now, let's take a look at the complete picture of all of my investments across all 5 accounts. All right, so the total amount invested is $45,212. As we look at each investment category, the largest category is in individual stocks and represents 37% of my portfolio, or $16,757. The next largest position I have is in cash, and that is 24% of my portfolio, or $10,769. The next largest position after that is in the S&P 500 index, 22%, or $10,020. The next category is the Vanguard S&P Completion Index, which tracks the small and medium-sized businesses. It's 14% of my portfolio, or $6,402. The next category is the Vanguard Fund, which is a target date fund for 2045. Typically, how they work is that early on, they're in more aggressive investments like stock, and then they move into more conservative investments as it comes closer to your retirement. And that represents 2% of my portfolio, or $860. And to round out my portfolio, I have 1% invested into cryptocurrency, which is about $404. All right, and so that is my complete investment portfolio as it sits today. Like I mentioned throughout the video, there are some tweaks and changes that I intend on making here in the near future, the next week or two. So I'll be sure down the road to provide an update on the changes that I actually did and why I made those changes. All right, so here's the update to my debt-free journey. Now, I don't normally do this, but I did include another $800 that automatically comes out of my account on Tuesday. So that is included in this particular number. So since last week, there's been reductions in my federal taxes and in both of my 401k loans. And so come this upcoming Tuesday, the total amount of debt that I will have is $19,621. And come Tuesday, the total amount that I would have reduced my debt by since May of 2020 is $30,047. Now, if you made it this far, thank you. And if you liked the video, please remember to like the video. Also, comment, share, subscribe. All these things helps to push my video out to more people on YouTube, and it would be greatly appreciated. Until next time, continue to learn and grow together. That's about it. So if you like the video, please make sure you like the video. It helps get if you like the video, if you made it this far, if you